Welcome to today's webinar, Engaging Clients with Technology. My name is Kim Opheim, and I'm your moderator for today. I want to extend thanks to IBAO for hosting today's webinar and to ClientDesk for sponsoring. So we'll start out with our agenda. It's a very simple, straightforward agenda. We'll do some introductions. We'll get to our topic, Engaging Clients with Technology. We're hoping to run about 15 to 30 minutes. We know that it's August, and we thank you folks for taking time out of your schedules, but we want to respect that time and keep it relatively short. There will be a Q&A session or section at the end, but we encourage you to submit questions during the webinar. So if you go to the question pane and go to webinar panel, you can enter a question and we'll see it at our end and we can get our panelists to answer. So our panelists today, we have Scott Wagler, Darryl May, and Colin Simpson. Scott's a brokerage partner and director of operations for his family-owned brokerage, Jocelyn Insurance, with 6 offices in and around Toronto, in and around Waterloo region. Jocelyn is a full-service brokerage providing home, car, business, farm, life, and disability insurance. In addition to its reputation for community support, Jocelyn is also known for pioneering technology, having previously been honored with an ICTA award for their work with SGI on paperless transfer of insurer documents to brokers. For more information, please visit their website, www.jocelyn.com. Darryl May is the principal broker for KTX Insurance Brokers Limited. Darryl is the leader of Canada's first online brokerage. With a focus on strategic growth through online channels and improving a digital client experience, Darryl has a true passion for leveraging technology to provide customer-centric solutions for the brokerage's customers and partners. Darryl joined KTX in 2006 and has nearly 15 years' experience in the insurance industry, progressing through a number of sales, client relation, underwriting, and management roles. Darryl also holds a CIP and is a graduate of Queen's University. Colin Simpson, CEO of Insurance Brokers Association of Ontario, is a longtime proponent of the independent broker network and Canadian insurance business. Colin specializes in corporate transformation and change management. He has worked with the Canadian insurance industry for over 15 years and is a seasoned corporate executive and director. As your moderator, I bring about 30 years of experience in the life and property casualty fields of the Canadian insurance industry. My experience ranges from broker principal, strategic IT advisor and partner, organization and business growth consultant, leveraging technology integration, and a published author. So now for our topic, engaging clients with technology. The Ontario government's April budget is causing a stir within the insurance industry as it relates to distributing documents electronically. It has broker heads turning in Ontario and across the country. The IBAO is doing a great job alerting brokers and helping them to get ahead of these changes, including their July webcast discussing the issue and providing information on potential solutions. ClientDesk, sponsor of today's webinar, feels this is such an important issue that they want to keep the conversation going by inviting these industry leaders to share their thoughts and ideas. So on with our theme, engaging clients with technology. So the first question I'm going to throw over to Colin. Even though this is an Ontario budget initiative, distributing documents electronically, do you think there will be spillover across the country?
Sure, thanks, Kim. Yeah, it's a complicated subject. So one of the big discussion points that is taking place right now, certainly in Ontario, is given that the government is going to mandate a discount, is how much is that discount going to be? And are insurance companies actually going to save money from consumers choosing to communicate electronically? And does it actually match the savings that are forced through? And it's a big question that needs to be answered. So if we look at the components of it, if you look at the different insurance companies that are out there, there's some very tech-savvy ones and some that struggle a bit with technology. And you can imagine those that are struggling with technology, if they then have to step up their game to provide communication electronically, they may be in a deficit position as far as investment is concerned, as opposed to saving money if consumers choose to communicate electronically. I think the main thing to focus on here really is the fact that the consumers that interact with our industry interact with other industries much more effectively than we allow them to. And I think there's going to be a real push over the years, certainly across the country, to ensure that consumers can interact with us electronically on a more effective basis. So not only just the electronic liability cards, but certainly the deck pages, and then hopefully it will eventually transform into being able to transact direct from consumers electronically as well. I certainly think, given the discussions we've had with the various insurance companies over the last few weeks, that this is looked at as a national challenge. So we're certainly treating this as something that will roll out, but I don't think the motivation is necessarily on a discount per se, like it has been driven here in Ontario.
More about just helping consumers connect.
Absolutely. Yeah, we need to make sure as an industry that we all work together, which is one of the reasons why we're starting as an association to pull vendors and insurance companies and our members together to look at ways to evolve the technology. We do have to look at ways to make sure that we work together as an industry to ensure that consumers' service standards are actually kept up to pace with everybody else. We have definitely fallen behind. We need more coordination, and not only to help consumers from an industry perspective. If we don't, there'll be outside competitors, whether it's the Googles or the General Motors of this world, coming in and basically eating our lunch unless we get our acts together.
Now, we were talking earlier, so it was the April budget. What's been happening behind the scenes between IBAO and the different interested parties? Yeah,
sure. I mean, we talk on a regular basis with Fisco. So the latest we've heard from Fisco a couple of weeks ago is they're still working towards a full implementation of the electronic liability cards. And certainly that slips, so there's no indication that it's going to fall beyond 2017. So that certainly looks like it's going to come through this year. Nobody has been able to give us any indication as to when the government is expecting to act on the discount for electronic communication with consumers. They're still working on that, and that was as of a couple of weeks ago. We do know they are very proactive right now in connection with the Marshall report, and given that there is an election expected here in June next year, that my expectation is that there'll be something that we jam through between now and then, because the Liberal government's track record on delivering their 15% reduction is not that great. So I certainly think there's more to come.
For the benefit of our audience, can you just comment on the Marshall report? What was behind that? Or
yeah, sure. I mean, the Marshall report has been built up over many years. Certainly, the IBC has been very instrumental in driving it forward, and it's looking at the review of the auto product here. As you know, over the last 30 years, the governments tend, and I'll say governments because it's not just liberal government, tend to do incremental reforms that have very limited impact over a short period of time, and then we tend to go back to the same issues again. So David Marshall has reviewed the auto product and put forward proposals to the government. We're actually submitting our formal response in the next 2 weeks, but it is something that we're very supportive of, and will hopefully take some of the costs out of the auto product itself.
Yeah, if there's one constant in Ontario, it's change to the auto policy.
Oh, that's for sure.
So to our other two panelists, Scott and Darryl, the question I had for you folks is, as a brokers, what's your concern over electronic distribution of documents, or are you concerned? How about we start with Scott?
Thanks, Kim. So we really don't have a concern about electronic documents themselves. I think it's a real opportunity. The challenge we have is delivering them, number one, and then delivering them with consistency as a second issue. Of course, we're working on strategies to address both of those. But challenge, no. Opportunity, yes. Issues with delivering consistently, and I don't think I'm an island on that.
No, I mean, if I could just add to that, as Colin here, one of the challenges that many of the insurance companies approach electronic documents differently as well. So as we know, that some produce broker versions, some produce consumer versions. Some brokers don't get the consumer versions, but they get the broker versions. So it's really trying to create the consistency in the marketplace and ensure that we all understand the rules. So another example would be electronic liability cards. We know BMSs and the vendors at the moment could easily deliver permanent liability cards, but they only generate the temporary ones. So from all the companies we've spoken to, and we've been around about 12 in the last few weeks, nobody seems to object the fact that the BMSs or the other tech vendors, we've got ClientDesk here, could actually create or certainly communicate the permanent liability cards if they so choose to. But we really have to get to the point where we get agreement across the industry on those issues.
Darryl, any thoughts that you'd like to share? Especially
I think as far as the concerns that brokers have, I think the source of distribution is a bit of a concern. Brokers want to ensure that consumers are accessing the documents from them and not the insurer. And so if consumers are getting the documents from the insurer, it's not impossible to see the insurer also pushing kind of other e-communications to the client regarding coverages, or maybe it's just a birthday greeting or whatnot. The danger in this, obviously, is in bypassing the broker's value to the client as a professional advisor and provider of options and choice. So I think there is some concern around where consumers are going to be accessing the documents from and who it's seen to be sent from as well. So.
Okay. Now, we do have a couple of questions that are coming in. So the one question, and I'll try to read this correctly, do you think the speed of the industry will increase or decrease? More has happened technically in the past 3 years compared to the last 10. So I do think it's a technical question, and so thoughts on that?
Yeah, sure. I mean, I certainly, from talking to the technology vendors and the insurance companies, the speed of need to change is certainly ramping up rapidly. And I think, the ability for certain insurance companies to keep pace is going to be hinged on whether we can all work together or not. And we don't really have much of an option other than to ensure that we do carry everybody with us. I've probably heard about the Guidewire projects that are going on. I think there was something in Canadian Underwriter yesterday about the successful testing of the accelerator. But that's just one example of a policy administration system. We've got about 100 companies here in Ontario. We need to find solutions for everybody to move forward. But certainly, the pace is definitely ramping up for sure.
Who do you think has the greatest challenge? Is it the brokers or the carriers, based upon what you just said?
It's mixed. They've got different challenges for different reasons. I think brokers have challenges on the basis that, and this is one of the things we've been working on the last few months to try and clarify what the choices are. There's a lot of choices of systems out there. We want to make sure that brokers understand what those systems are. And we want to make sure that the insurance companies are supporting those systems. We're going through an exercise right now of visiting the insurance company technology heads to get their buy-in to try to ensure that the broker's technology is the technology that is used to service consumers up front and foremost. If we can get that agreement and get them to allow the passage of data into the vendors that create that ability for the brokers, then that'll make everybody's life easier. What we can't do is leave it to the market to figure it out themselves and not create any clarity, because what we'll end up doing is, instead of having 50 different portals in the market, in the broker's office, we're going to have 50 different ways for consumers to access their policies, which is going to be very consuming for consumers, and it'll erode the broker value proposition. So we have to get to that as soon as we can.
Scott, did you have any thoughts on that question regarding the speed of?
The speed of change. So I don't think we've seen anything yet, and it's not just the speed of change of technology; it's the speed of change of consumer demand, right? And the biggest challenge that we have, we're brokers. We have all kinds of challenges, but one of the bigger ones is the confusion. So really, it's tagging on to what Colin said. The confusion that we're going to create in our own consumers' minds because of how things are going to be delivered. The rate of change and the ability to keep pace with the rate of change, Colin mentioned this too, is different for different companies. The Intacts of the world and the Economicals of the world installing Guidewire, and then we go right down to our local Farm Mutual. And we're dealing with all of these companies, and with some customers that can understand complexity and some that can't. So it really is a bit of a conundrum in how we can deliver what we are being asked to deliver and we need to deliver to bolster our value proposition as brokers and what can be delivered. That's the tough part. And it's, you know, and the story isn't completely written yet, obviously.
Agree. We have some more great questions here. So Gavin asks, is digitization do or die at this point for the broker? And how integral is it for sustainability and for growth? Darryl.
Yeah, okay, well, do or die is a pretty drastic way to phrase it, but I would say, yes, do it. Because I don't think you really have an option right now. I think there's obviously direct offerings out there that are digitized their business, and they are a direct competitor to the brokers right now. So I think I don't think you, unless you're focusing on large commercial accounts, if that's your business, then maybe you don't have to worry so much about digitization. But even there's probably some opportunity. But for any other broker that has a large personal lines book or smaller business book, it's a necessary part of your strategy in future.
So,
if I could just, it's Scott. If I could just jump in just on Darryl's coattails there. I think it's a difficult question to answer in totality. So, do brokers need some digitization? I agree with Darryl, but maybe for different reasons. So, we have largely rural brokers in our neck of the woods. We're not a large urban broker, although we're kind of close to an urban center. The big thing is if brokers have choice in how they want to run their business model, but understand what that choice can mean. So the point I want to make is this. We've been surveying our customers for a long time. I just want to share a couple things with the group on the line. So the question is digitization or not digitization. So I can tell you that 75 to 85% of our customers want to see electronic access to their insurance policies, want the ability to change some of their personal information or policy information. They want to be able to access electronic pink cards, and they want the ability to make changes to their policies. And that number was 75 to 85%. Depends on exactly on the question, but doesn't really matter. That's over 3/4 of our policyholders. Real data.
Okay.
So you can actually answer the question for yourself.
Yeah, I mean, I'll just throw there's a different perspective on the digitization as well. It really comes down to being able to service the consumers in the way that consumers want. And I think one of the things that brokers need to be cognizant of, and I'm not talking about the more proactive brokers, the ones that may be a bit more complacent, is that if discounting is a reality at some point next year on being able to communicate electronically with your consumers, and you either choose not to, or you choose or are unable to, then the insurance companies are going to have no choice other than to work around you and do it themselves, and then start to interact directly with the consumers. And we've seen this with the Intact offering that we've stepped in, and we're working very closely and very productively with Intact to ensure that all that communication goes through the broker. But you know, there is a risk out there that if brokers do not continue to pay attention to consumers and the servicing of those consumers, then A, they will lose contact with that consumer, but B, the value proposition will change, and insurance companies won't continue to increase their service levels and keep paying brokers the same amount of commissions. I mean, something's going to have to shift there. So is it something that is a tipping point now? I would say yes. I think it will actually be a tipping point for a lot of brokers in their succession planning as to whether they want to get into more heavy investment in technology as we go forward. I think it's essential for our industry, but I think it may lead to some brokers deciding that it's time to get out. So it'll be interesting to see what happens.
So we have a I just want to interject a question that we have, and it really ties into what Colin's been talking about, but it words it a little differently. So Kim, my namesake, has asked the question, how do we protect the broker system if the insurers has direct contact with insureds? Darryl, how about you take that one, and then we'll go to Scott. We didn't lose Darryl, did we?
No, sorry.
It's back on.
I'm learning how to use my mute button. Colin touched on the Intact offering, which is a nice piece of technology, but brokers have the option not to use their solution if they have another solution, right? You know, whether it's a ClientDesk or a Sharp Mobile or whatnot, you know, brokers are going to need to have an offering out there to make sure that they have something that, you know, that gives the clients what they could get elsewhere, to say it delicately. So I think the number of offerings that are going to be coming from the insurers is going to multiply. So brokers are going to have to look to solutions to centralize their client experience to make it consistent and broker branded.
Scott, can you chime in on that?
Yeah, one of the concerns that we have as brokers is even if a company, so we've mentioned Intact a couple of times, excuse me, the client center that they're proposing certainly could be an answer for your Intact customers if you make a choice not to try to understand and implement a solution for yourself as a broker. But I don't think that just because you've implemented a solution and you're running with something with your clients, that it is going to be a stop for the companies not trying to continue to do what they're doing. So even with Client Center, I mean, Intact's been very upfront with us saying, okay, you have a solution because we do and we're running with it. However, we're still going to promote the Client Center piece to your Intact customers in the event of a claim. So it doesn't eliminate the stuff.
Yeah, I think the real key to me in insurance company contact, that as far as brokers are concerned, the broker needs to be in control of when that contact takes place so that you can continue to be in control of the consumer relationship. So with the Intact offering originally, when they said they wanted to go direct to consumers, we peeled that back and said, no, it's got to be at the broker's choice. And if you're choosing to put your consumer in touch with an insurance company, then you are making a conscious choice to remain in control over that relationship. So I think there's definitely ways that it can be done, but we need to make sure that we support brokers in an understanding as to what the implications of all those contact points are.
But I think the real cool part about all of this is not the challenge that it puts up in front of us right now. It's the opportunity that it gives us to really promote the value proposition that we have with our customers.
100%.
If you choose to do that, right? So we can look at digital solutions for each of our operations and how that can create a better experience for our customers. Not all customers want necessarily that experience. We get that too. So, I mean, to be clear for us, we're kind of a rural, generalist, traditional brokerage that's entering into this brave new tech world and trying to understand how it can make a difference in our customers' lives, in our relationship with that client. So we're still in that discovery mode. The only thing that I can tell you is that when we look at the data from our own policyholders, they're asking us for this stuff.
Yeah.
So it really is not so much about, the government's going to say, hey, we got to make insurance companies give you a discount for electronic policy delivery. This is pre-discount stuff. These questions have been out for a year to all of our policyholders. It had nothing to do with discounts.
Yeah, I agree.
It's everything to do with experience.
Yeah, I certainly think we're way behind, as I said, on other industries as far as the consumer service is concerned, and there is a huge opportunity for us all here to make sure that we do increase the value proposition and educate consumers as to the value that brokers bring, for sure.
On that note, we're at the 25-minute mark. We've been dealing with our Q&A as we've gone through the today's webinar. So I think we're going to wind this up at this point in time. I'm sure it's a conversation that we could continue on till probably past 6 o'clock tonight. But I thank everybody for their participation. And I just ask that all of you folks, I just want to thank everybody for attending and ask you to please visit my website. K. Opheim Consulting has teamed up with Brenda French of the French Group and Eric Walker of the CW Group and Adventure House Travel C Courses to create a truly unique executive education experience. Please check out the blog on my website for a teaser, and thanks again for joining us this afternoon.